Welcome to CEO Connect, presented by CU Solutions Group. On this month's episode, we'll discuss single app strategies for mobile banking technology.
I recently attended the Money 2020 conference in Las Vegas. There were more than 150 credit unions with team members wandering the vast convention center and expo hall. And those numbers didn't include the even larger number of people like me from credit union support organizations. This year's event was dubbed the Money Revolution, sponsored by PayPal, and the general sessions, breakouts, and expo hall vendors shared information on all aspects of traditional and leading-edge payments and banking topics. I had 3 learning experiences that stood out from the numerous ideas and insights gleaned from the conference. All 3 reinforced the theme that despite the money revolution taking place, no amount of technology and speed will trump good product features and service. Even the largest of credit unions will likely always lack the technology sophistication of big banks and new fintech disruptors. But in a financial services environment pushing service delivery to digital channels, more technology that simply automates and speeds up processes won't necessarily translate into a winning value proposition. Now, credit unions, large and small, will beat their competition with a service-first approach through all channels versus a simply mobile-first approach, in my opinion. My first epiphany came while sharing a cab ride with a technologist from Wells Fargo Bank from my hotel to the convention center. In our short cab ride, Ahmad told me that he works on a team that is building smart artificial intelligence tools that automate cross-selling for Wells Fargo. Now, ironically, this strategy has cast Wells and other big banks in an unfavorable light of late. We see this as we read about the recent settlement agreement where Wells agreed to pay $65 million to settle claims that it misled investors about its cross-selling strategies. And this was just the latest in a string of such consumer complaints. I'm not sure how many technologists Wells Fargo employs, but it has been reported that Chase has over 40,000. That's more than all the employees employed by Facebook. Just technologists, 40,000. And as I thought about the credit union people like those at the conference scrambling to get technology ideas, I realized how critical it is, first of all, to foster credit union collaboration if we are to keep up with the big banks and the so-called disruptors. Now, all of the incumbent financial institutions, large and small, as well as new fintech and big tech disruptors like PayPal, for instance, seem focused on 2 things that relate to the consumer experience. They're trying to make payments, loan decisioning, money transfers, account setups, and product cross-selling faster and more enjoyable at the same time for the consumers and small businesses whom they serve. But the irony here is that big banks like Wells Fargo continue to tarnish their brand, or risk doing so, and their image by applying technology in ways that creates reputation risk. Automated cross-selling and new account generation have led to numerous large fines, lawsuits, and negative PR for those banks. So technology that drives speed in processes can actually be a bad thing if consumer experience and a principled valued proposition aren't at the forefront. There's a lesson in that for credit unions. My second insight about the intersection of speed and service quality was reinforced as I listened to Regis Hadaris, Executive Director of Rocket Mortgage for Quicken Loans. Of course, Quicken Loans being the Detroit-based mortgage lender that claims to be the biggest mortgage lender in the U.S. During a panel discussion, Regis made a very insightful point when he said that the Rocket Mortgage app, Quicken's mobile processing platform, can speed up the loan approval process to be done in just a matter of minutes. But here is the key point. Hadaris said, you can't just make a process faster to satisfy the customer. You need to improve every aspect of the consumer experience too. And of course, despite the speed and convenience of Rocket Mortgage, several new investigative reports have made the point that the borrower doesn't always get the best deal in this speedy process from Rocket Mortgage. Buyer's remorse can be a big problem once that fast authorization and closing lead to the realization that the consumer might have just paid a big convenience fee for speed. Speed doesn't always trump the thoughtful, consultative lending approach of a credit union, but speed does matter. So as small providers like credit unions look to digitize and mobilize everything from money transfers to loan approvals, Listening to Hadaris talk about Rocket Mortgage and listening to the Wells technologists describe their latest AI-driven cross-selling tools reinforce the idea that amazing and delighting consumers is about more than just speed. It has to be about process reinvention. And in the case of mobile banking apps, it needs to be about features and functionality. Speed is just one important objective within that vision. Similar to how Quicken Loans created a mobile division of its operation under the Rocket Mortgage brand, there is a similar strategy in banking being applied by Customers Bank out of Pennsylvania with its Bank Mobile brand. It's actually a division of the bank that provides a mobile banking app online as a division of Customers Bank. As I listened to a panel of smaller bank leaders talk about competing in the digital age, one panelist talked about her 50-employee shop at a bank and the importance of good in-branch customer service. She staunchly defended the need for customer service and how technology sometimes isn't the panacea for meeting customer needs. But conversely, Jay Sidhu, CEO of Bank Mobile, was also on the panel, and again, this is a division of Customers Bank out of Pennsylvania. He spoke confidently about his company's product. Bank Mobile claims to be the first completely digital bank. Bank Mobile is really a rebranded mobile platform that touts low-fee checking, high-yield CDs, low-cost credit cards, and personal loans in an online environment. Jay's premise is that banks are all going out of business unless they adopt a mobile-first strategy. Of course, when you read the fine print, Bank Mobile is just a division of Customers Bank, an $11 billion bank chartered in Pennsylvania. But Bank Mobile and Rocket Mortgage are using branded technology to offer a sleek, speedy user interface that appeals to millennials and others who want to bypass the traditional banking system. It appeals to young people especially and transient consumers who just want a low-fee digital experience that includes basic checking, debit and credit cards, and easy bill pay services without ever having to step into a branch. The reality is that most progressive credit unions and banks also offer this mobile experience, although as more of an adjunct service as opposed to a separate, standalone, consumer-branded product. Again, it isn't just about speed. The user interface and user experience of a mobile platform are even more important. When applying these ideas to credit unions' mobile banking products, mobile banking platforms often seem overly focused on simplicity and speed for the most basic purposes of checking balances, paying bills, transferring money account to account, and remote deposit capture. But while these features speed up transactions, most larger banks and credit unions are trying to balance simplicity with the idea of expanded feature enhancements. In other words, many are trying to expand the way needs are met as opposed to a pure focus on transaction speed. And I think that's the right strategy. For instance, most credit unions have not yet integrated all their various consumer apps into one mobile platform. Things like card controls and P2P money transfers, mortgage and consumer loan processing, personal financial managers, auto research apps, branch and ATM locators, shopping tools, insurance offerings, and credit monitoring are often available through standalone apps and on the credit union website, but not in the mobile banking app itself. They're not integrated into the mobile app experience. And it's worth noting that Bank Mobile hasn't done that yet either. In fact, there is some wisdom in not cluttering the mobile app with all of those features that I mentioned and paying the never-ending cost of technology integration with the credit union's mobile banking provider. But fewer and fewer consumers even visit their bank or credit union website anymore if they're doing their basic recurring transactions on their mobile phone. This idea of balancing simplicity and speed with an expanded array of features constitutes the basis for CU Solutions Group's groundbreaking product that we call LifeSteps Wallet. This customizable product allows credit unions to create a one-app strategy that wraps around the mobile banking app itself. The most essential mobile banking functions are prominent at the top of the app without compromising speed and simplicity for the member. Then numerous customizable features are built in to help members with shopping, auto, home ownership, and financial wellness, including a PFM solution, identity protection, credit score monitoring, and other such features. As technology empowers consumers to take control of their credit scores, control their debit card fraud access while traveling, make speedy peer-to-peer money transfers, and apply for and process loans, credit union members will demand and value these consumer experience enhancements as much or more than the speed and simplicity in basic traditional mobile banking functionality. But this balancing act requires a technology approach that emphasizes speed and simplicity while also providing easy, attractive access to other feature enhancements. I'm betting that credit unions and banks that effectively strike this balance between speed and simple, compelling feature enhancements will grow their mobile banking business. The principle-based service-first mantra of credit unions can put them at a competitive advantage over the deep-pocket for-profit providers.